I'll start with our corporate overview. I've got a very stable board, very supportive board, led by Greg English. And myself, I've only been in the role for about 8 weeks, but I do have a fairly extensive lithium background, so quite relevant considering we mine lithium. And I'm supported by James Vargo, who's my CFO. Some notable things I'll call out here is our cash balance. We're in a really strong position. We finished last quarter, the end of financial year, with $87 million and nil debt, so we're in a really strong position. Our investment highlights. So we got going really quickly. We're the only lithium mine in the territory. Our operation is paused at the moment, and we are very focused on optimising our asset and being in a position of restart ready. So a bit about our operation. You'll see the Darwin capital up there, Darwin, and then we've got the East Arnhem Port. So we're really close to some critical infrastructure, only about 88 kilometres away from our mine, so we're pretty gifted to have that. But you'll see the grey highlighted areas. We hold about 500 square kilometres of the Bino pegmatite field. You'll see the scattered green dots, which is the pegmatite prospects, and then you'll see Grants, which is our current mine. Our processing infrastructure's also adjacent to the mine, and we've got BP33, which will most likely be our second asset we'll bring online. So we have a very large holding in and around our asset, so we think it's a pretty strategic holding that we do have. There's a lot of historic tin and tantalum scattered right throughout our tenements, and certainly walking the ground is very evident, and for those of the geologists in the audience, you'll understand that those are key signatures for finding additional lithium deposits. So we produce what I'd call quite a coarse grain spodumene product. It's a very clean product, and certainly talking to our customers, they really like it. If you get to grinding the stuff down too fine, you have a lot of loss in the front end of when you're further refining through hydroxide. So our product's highly sought after by our customers, and you know, once we get operating again, they're very keen to continue those relationships. So a bit of history. As I mentioned earlier, we did get going very fast, and you know, when you think about how many resource companies go from an explorer to a producer, there's not too many. So I certainly recognise and take my hat off to those that have served before me to get me into this, or get our organisation into this position. But essentially, first lithium discovery in 2016. We had our mining lease granted in 19, and then we completed our DFS in April 2019. And I guess fast forward, you know, the construction of our DMS plant commenced in June 2022. We produced concentrate and first shipment in May 23. So a rapid discovery, a rapid build, and certainly, you know, in my short time, I've been to site several times, and I walk around and I'm absolutely amazed at the quality of the asset that we do have, and it's been built incredibly well. I've been around processing for a long time. I've constructed a lot of processing facilities and certainly operated them, and I'm really pleased with the asset that we have. It's a very solid build, and you see, you know, our total capex investment, you know, circa $250 million. I'm just not sure you could build that in or repeat that in today's climate. So we are in a really strong position. Balance sheet, no debt. We have a mine. Yes, it is on care and maintenance, but certainly we'll be there to capitalise on, you know, what will be a returning commodity at some point. So high quality infrastructure. It's really good to join a business that does have such high quality infrastructure. I've talked about the mine, but certainly You know, we have an all-weather road. We are 88 kilometres from the Darwin port, so we can access that all year round. In fact, I was there at the port on Friday, and I just stood back and thought just how simple this operation is. We have our pad a couple of 100 metres away from the ship loadout, and you know, compared to some of the berths here in WA, you know, very minimal congestion. So we were a relatively large customer of the port, but if you look at our infrastructure, we have, you know, a proven logistics chain. You know, we know how to operate our mine, so we're in a really good spot for a restart. We also have a very supportive government. It's one thing I've noticed, and when I do travel in and out of the territory, just how engaging the government is up there, quite pro-mining and really interested in what we're doing and how they can help. So exploration, we are spending around $8 or $9 million on exploration this year. I think there's a bit of value to be had. Predominantly the spend will be spent on lithium, but there's some other interesting targets. We do also have Napaby there, which is our uranium deposit. We have a JORC compliant resource there, about 8 million pound. We will be drilling some holes in that later in this year, but there's also gold, you know, base metals, niobium, and potential for rare earths. So we do have some interesting exploration targets that we'll explore. And as I said, I think there's a bit of value to be had, but certainly the focus will be on, you know, in and around that Finniss area, you know, where we can potentially exploit our asset. So that's what the exploration strategy will look for this year. So building a high-performing team. As I said, I've been in the role about 8 weeks. We have gone through a very significant reset, as you do when commodity prices swing so widely as what we've experienced. But really, that's my opportunity. You know, I've been gifted with the team that is there, a really experienced, dedicated team, and certainly I'll be looking to add to that team into the future. And you know, the people that we'll bring in will bring the relevant experience, you know, the right mindset, the right culture, the right attitude. So when we do get going again, we'll be able to get going fast. We'll have the right experience around the place, and certainly, you know, the right culture to deliver the right returns. So remaining restart ready, I think I probably best explain this in two facets. So we have our asset. It is on a very light touch care and maintenance. The asset is not that old. It's in great condition, and you know, we have a handful of people on site that are maintaining that asset, and we also are maintaining all our approvals and all our obligations under the mine management plan. So that's our site activities. We do move water around. We keep the asset in good condition. As I said, at some point, you know, we'll look to re-enter the market. We'll be there to capitalise on the upswing. The other part is I guess you know, the important part as well is a very detailed bottom-up assessment of all of our costs, utilising the 18 months of operating learnings and data that we have. There's no doubt about it. You know, could we have done things differently? Well, in hindsight, of course, everyone can, but the reality is we're here. We've got a tremendous asset, and an asset that will re-enter production at some point. But certainly, you know, James and my role is to drive the costs out of the business, rebuild these models, and get them, you know, match fit for when that opportunity does present to us. So we'll look to present or complete those studies in the first half of next calendar year. But also, I think if you look at what we also have left over on site, we have 5,000 tonnes of coarse grain spodumene and around about 75,000 tonnes of fines materials. So, you know, they're opportunities that we'll look to do something with when the market's right, but certainly opportunities that will strengthen our balance sheet as we move forward. So I think I saw a slide up yesterday around, you know, how challenging it is and how time-consuming it can be to develop an asset. I've used around about, you know, 10 plus years. I think that's reasonably typical, but certainly, some of the challenges that presenting those that are looking to enter the market. I think I saw a slide yesterday around about 18, but nevertheless, you know, that's the reality of what sits in front of a lot of organisations. But fortunately, you know, we're well past that. It's always good to see a bunch of green ticks and not too many red crosses. But you know, we have all our approvals in place. We have a plant. We have a proven logistics chain. We have a lot of knowledge, and we're ideally positioned, you know, to capture the market upswing when it does return. So look, in summary, you know, whilst the market is the market, and you know those things that none of us can control, I guess what I'd like to leave everyone with is, you know, we're very focused on getting ourselves organised with our costs and understanding how to re-enter the market and how to spend capital in the right areas that add real value to how we're going to operate in the future. So we are on care and maintenance. It is a very light touch. We're doing our planning. We're getting organised. We have an incredibly strong balance sheet. You know, we are debt free. We have a pretty solid exploration strategy that I think will add value to our organisation, and I look forward to updating everyone further on that as those results come in. And look, when we have a strategic asset, as I said, we're the only lithium mine there in the territory, and we've built the asset. It works. You know, we know how to operate it, and we have a proven logistics chain. So that's the opportunity that's in front of us, and certainly the opportunity that we'll look to exploit to really drive that shareholder return. That concludes my presentation. Thanks for listening.